Welcome to the College Investor Audio Show, where we talk about the biggest issues impacting millennial money, from student loan debt to side hustles to building wealth. We will show you how to get out of debt so that you can build real wealth for the future.
Hello, welcome to the College Investor Audio Show. So glad you're here today as we take a look at this. 2 tax changes crypto investors need to understand. So the IRS began treating virtual currencies as digital property back in 2014. Thanks, IRS. So for tax purposes, this largely means crypto income is treated as short or long-term capital gains rather than ordinary income. For serious cryptocurrency investors, this can make accurately filing taxes a little more challenging. Crypto tax software like CryptoTrader.tax, that's CryptoTrader.tax, helps you with bookkeeping. But if you earn income through activities like mining or staking, tax reporting gets even more complex. Ugh. Furthermore, with Biden's recent infrastructure bill, there are new crypto tax rules on the horizon that have serious implications for investors. So why are crypto tax laws changing? Inside the bipartisan infrastructure bill. Let's go in, shall we? On November 15, 2021, the Infrastructure Investment and Jobs Act became public law. This $1.2 trillion bill primarily focuses on improving America's infrastructure. This means investing in roads, internet, public transportation, airports, and kind of the overall power infrastructure. This bill, in conjunction with the Build Back Better framework, is the current roadmap to create more jobs while improving the country's infrastructure. So, what does any of this have to do with crypto? Well, despite being an infrastructure bill, Bill H.R. 3684 contains legislation that impacts cryptocurrency exchanges like Coinbase and Gemini. In turn, this impacts how crypto taxes work. What does that have to do with roads? I don't know. Here are the 2 main crypto tax changes that are coming. Cryptocurrency exchanges will be considered brokers. In 2023, cryptocurrency exchanges are going to be treated like just regular stockbrokers. Specifically, cryptocurrency will have to issue 1099-B tax forms to investors. This means crypto exchanges will start tracking transactions and then just reporting them to the IRS. This also means reporting your personal information and any gains or losses you have per transactions. Overall, this change isn't the end of the world for crypto investors, so don't fret. Since crypto is already treated like property, you need to report your capital gains and activity anyway when you file your taxes. However, many cryptocurrency advocates aren't fans of this bill, to say the least. For starters, it adds more crypto tax requirements, and it makes accurate bookkeeping even more vital. Plus, if you want to use decentralized exchanges, DEXs, like BISC, or hold your crypto offline in a hardware wallet, you still need to accurately report your crypto activities. When the infrastructure bill was introduced, there were also concerns that the U.S. Treasury Department would also go after crypto miners under the new legislation. This could make it more difficult for miners to earn income and also impact mining hardware companies that actually produce and sell miners. The Treasury Department has said it won't target miners or crypto hardware companies, but only time will tell how this bill plays out in reality. Digital assets can be treated like cash. Another crypto tax change the infrastructure bill is introducing is for crypto transactions of $10,000 or more. Under the new legislation, businesses will have to report the identity of the sender to the IRS by filling a Form 8300. Currently, businesses have to file this form if they receive $10,000 or more in cash for a payment as part of anti-money laundering efforts by the IRS. The term digital assets also leaves some room for how this bill will play out. For example, accepting NFTs as payment could potentially fall under this requirement, although it's not entirely clear yet how NFT taxes will be impacted. It's also unclear how decentralized exchanges can comply with this requirement, since reporting the identity of users strays from the mission to be decentralized. So, When are these tax changes happening? These new regulations are going to take effect January 1st, 2023, so you have some time to think about it. This means your crypto tax filings for 2024 will be impacted by these changes. But 2021, 2022, nothing's going to change. So how can you prepare for these changes? Cryptocurrency exchanges like Coinbase and Kraken will likely inform users of upcoming changes and how to prepare. However, it's also important to take charge of your own bookkeeping so you're ready for some new stuff. So here are some steps you can take to ensure the upcoming crypto tax changes don't catch you by surprise. Invest in cryptocurrency tax software. If you regularly invest in crypto, investing in crypto tax software can help you save some time and also improve your accuracy too when filing your taxes. Tax software like we mentioned earlier, CryptoTrader.tax actually lets you import transaction information from hundreds of exchanges and wallets. It's pretty cool. And this helps you track cost basis values for your various holdings and any capital gains or losses. You can even use tools like tax loss harvesting to potentially offset some of your gains to save some money when filing. If you frequently trade or have multiple crypto income sources, consolidating this information with tax software is a really smart move. With tax software comes just consult a professional. There are tons of crypto tax professionals, and it's another way to prepare for tax season, especially if you have a complicated return. Companies like ZenLedger offer paid crypto tax consulting calls starting at $195 for a 30-minute consult. You can also pay for tax filing help starting at $2,500 for single-year filings. I know, that's expensive, but if you're trading a lot and you have a really complicated return, well worth it. Other crypto tax software like Coinly also has a helpful database of CPAs, attorneys, and accountants who specialize in cryptocurrency. Just stay up to date. One last way investors should prepare for crypto changes is to keep an eye on the industry. Cryptocurrency is largely in its infancy still, and new requirements can appear seemingly overnight. Plus, existing legislation can change. For example, Texas Senator Ted Cruz has introduced an amendment to the infrastructure bill that aims to repeal how the use of broker is used under the new law. Cruz and other cryptocurrency advocates fear that the infrastructure bill will negatively impact companies tangentially involved in crypto, opening the door for IRS overreach while simultaneously hindering DeFi and blockchain innovation. Other senators are also fighting the infrastructure bill in an effort to protect blockchain and crypto wallet companies from new reporting requirements. Go, senators! The point is this. This issue is far from settled, so as an investor, take control of your cryptocurrency through accurate bookkeeping and by using your own wallet. Additionally, keep your ear to the ground since the world of crypto moves pretty fast. You know that. And here are some final thoughts, real quick, and then we'll wrap this up. The infrastructure bill raised alarm bells for many cryptocurrency investors, especially with how broad the term broker can be in the eyes of the IRS. Don't make things broad for the IRS. They'll get you. However, not much is changing in terms of your individual responsibilities. You still need to accurately track your crypto gains, declare your activities, and file taxes on time. This is why consistent and accurate bookkeeping is so vital. By using various crypto tax software and tracking your performance, you can be prepared for upcoming requirements and successfully invest in digital assets. Well, that was fun, wasn't it? Thanks so much for stopping by today. We hope it was helpful. If it was, and you think it can help some of your friends, please feel free to share this as well with them. You can find out more about tax software, especially crypto tax software, on our website, thecollegeinvestor.com. Thanks again, and we'll talk to you again real soon.